Hello, this is 13 with another Silk Trades video. Today we're going to be going over the MacD indicator. It's something that a lot of people have been asking me to go over. It's pretty basic, so this video won't be too long as the other videos I've been doing. So we're just going to be looking at SPY right now. Everyone has their own personal preference on what chart they like to use the MacD indicator for. Personally, for me, I really like to use it on the 1 minute chart, so that's what we're going to do today. So our indicator is going to be right here. There's two lines. Let's just click it so you guys know how to set it up. So the value, the moving average, convergence, divergence plot will be the blue line right there, and the average is going to be the white one, that the moving average for the MACD, of course. While looking at it, I just want to go over some basic illustrations on what that means. So as you can see, when the blue line crosses above the white line, which is the MacD average, you can see that that is a bullish divergence, which usually means that this is usually where you'd want to buy in the stock, and you kind of want to ride it up until it gets over that zero line. The zero line is going to be the one straight through the middle. So usually you want to hold it through, and you want to sell it once it diverges bearishly again. So right here we get this red mark right here. This is where you want to sell it. Obviously you can wait a little bit longer if you don't follow the trend correctly, but it's pretty straightforward in that concept. There's not too much to go over. Zero line crossovers are going to be when you see both of these lines cross over this line. That's usually going to be bullish, or if it crosses under here, that's bearish. So usually that's another good way to use the MACD indicator. If it goes under the zero line, that's usually where you'd want to short a position. If it goes above, that's usually where you would want to get into shares or calls. Most likely though, this type of play, I really like it as a momentum play or a scalp trade. I don't really think that's a good idea in terms of investing long term if it crosses over that. Some people do use it, so like let's say right here on the daily chart, I'm not saying it's bad, but I just find more success using the 1 minute chart on it. As you can see, it goes right under that zero line, and right here is where you'd want to short SPY. And as you can see, you would have probably hit that bottom right there, and as you get that bullish divergence, you'd want to get back to it. As you can see, it has a little gap up right there. So the MACD isn't perfect. It's not going to give you the absolute perfect entries and exits, but it is a pretty good indicator to get into good positions and minimize losses in terms of bad entries and exits. The indicators I like to use with the MACD are going to be the stochastic slow and as well as the RSI. I usually don't look at the Bollinger Bands or the 50 SMA or 200 SMA when I'm using the MACD. That's just a personal preference. You could use it if you want. Obviously, no right or wrong answer to that. Let's go into a real life example right now. So for SPY, let's look at today. We started trading today around 9:30. We didn't want to get into anything right away because we just saw this golden cross right here. As the golden cross hits, we see SPY exponentially go up with good volume. So that's a breakout right here happening on SPY. Right around here is where we see a bearish divergence, and this is where I got into puts for SPY November 16. I'll show you that contract in a second, but I want to go over why I got into it and show you how I got into it so you guys can do the same plays that I do. So right here, we can see a bearish divergence. This isn't going to be a clear-cut answer that, hey, SPY is about to go down now, but it's a good place to start a position. And I emphasize that because dollar averaging down is usually a good play if you want to be less risky. I usually do that when I short a position because shorting's a lot more dangerous. In terms of just getting calls or contracts and options, it doesn't really matter too much if you jump straight into it, as long as you have a day trade or you're planning on scalping these contracts. So as we go down right here, and I'm still holding these contracts. I got in at 215, so I just wanted confirmation on that. So usually I wait for like three red arrows or whatever you want to call them before making my position known. So I usually wait around here. This is where I kind of got in. I got in at the little dip, and I waited until these candlesticks went away. So my cost average was 215. I got in at 215. I'm going to pull that up right now for you guys. So this is what I got in at. I put in about $860 for this. And sorry, I was checking on my puppy, making sure he's not biting any wires. But this is the contract I got into. As you can see, I'm up about 2% right now. We were up 8% later in the day, but I'm going to swing this through elections because I think the Democrats will win. We'll see how that plays out. I might minimize my position at the end of the day to maybe 1 or 2 contracts, but we'll see. But as you can see, I got in at around 2:15, so I got in right here at 10:35 a.m. This is where I planned for my entry just based off of the MacD indicator. So I used the MacD indicator for this specific play, and I thought it was pretty useful. In terms of other indicators I used to get into this play, just had a big gap up, so I might average down actually right now, but let's see if we can figure out why that is. No indication why. Anyways, that is how you use the MacD indicator. As you can see, this was a real life example. You can see where it might go wrong. Indicators are best used if they're popular. So as you can see right here, it was on a bearish divergence and it crossed that 0 line very quickly. So it's not exactly the most elegant of the indicators. Usually when it's up here and it does a bearish divergence, or it's down there and it does a bullish divergence, as long as it's pretty downwards and there's no access to go over the 0 line, it's usually a more safer bet. It's just it depends on how you plan it out. So if you have any questions on it, please let me know. Pretty basic stuff: 0 line crossovers and signal line crossovers. That's basically what the MacD is used for. Always feel free to join our chat room. I always leave a link in the YouTube description. Make sure you like the video if I was able to help you out a little bit. If you have any questions or you like any other videos done, feel free to message me or ask in the YouTube comments. I'm more than happy to make a couple videos, as long as it's indicators I believe in or indicators that I use as well. Alright, have a great day and good luck trading.